Could your dream home be just a mirage? The shocking truth behind the locked doors of America's housing crisis. In a twist that reads like a financial thriller, the very institutions designed to safeguard that American dream that we hold so dear of home ownership have cast an invisible chain around it. Today, we're peeling back the layers of a story so impactful, yet so overlooked. It could change how you view the housing market forever. Imagine for a moment a scenario where millions of homes vanish from the market, not due to a natural disaster, but a man-made financial phenomenon. This isn't the plot of the latest Hollywood blockbuster. It's the reality of millions of Americans that are living right now, thanks to what experts call, you've heard of it, the lock-in effect. But wait, there's more. And trust me, you're going to want to stick around for the revelations ahead. How did we get here? Who's really benefiting from keeping your dream home just out of reach? In the heart of America's housing market, a silent crisis brews. Courtesy of the Federal Housing Financing Agency, FHFA, the Federal Reserve, and the banks we've been taught to trust. The recent FHFA working paper reveals a startling figure. 1.3 million homes were lost between Q2 2022 and Q4 2023. But who were they lost to? And more accurately, why? The culprit of this phenomenon is known as the lock-in effect. Again, you've heard this before. Homeowners comfortably seated in their low mortgage rates find themselves prisoners to their own homes, unable to make a move without facing the harsh reality of the current high mortgage interest rates. This isn't just about numbers on a page. It's about real people unable to chase job opportunities, accommodate growing families, or simply change their living situation. You are out of options. You are locked in. Let's look at what your options actually are. You pay a higher interest rate, and many will because they can afford to do so. You can put more money down from the home equity that you're transferring from the sale of the house to limit that payment on the next new house that you buy, or you can go rent. Turns out rents continue to rise. Yes, we have absolutely seen the pace of increase slow slightly, but they are still climbing. Just like inflation, we have seen the pace of inflation slow, but inflation is still here and prices are still going up. They're just going up at a slower rate. So we should all feel good about it. It's the same on housing. And in fact, if you do sell and then buy, you're paying more per square foot. You're buying on the upside of a very stretched market, but with more risk to the downside. The FHFA paper paints a grim picture. Each percentage point increase in mortgage rates above a homeowner's current rate slashes the likelihood of selling their home by a staggering 18.1%. The consequences? A 57% reduction in home sales in Q4 2023 alone. But the plot thickens as this lock-in effect has, counterintuitively, pushed home prices up 5.7%. Even as higher mortgage rates should technically have cooled the market down. The rates have crushed demand. In economics, if the price of something is staying stable, that means there is an equal amount of supply and demand. Demand has been crushed, but so has supply. And as it turns out, supply has been hurt just a little bit more than demand, so that's why we're seeing an increase in home values. Not to worry, we have builders bringing on new supply, but wait a minute. Builders building for rent, not for ownership. National builders have shifted to work for hedge funds as they see more profits and most likely less aggravation from individual buyers. It's just an easier process for them to build for the hedge funds as it is for you, me, anybody else that's watching. They know there is an appetite for BTR homes, build to rent homes. They have shifted their efforts to accommodate. And for more profitability, of course. So the new supply is not enough to help with the little demand that is out there at these current rates. The villains of our story, the banks and the Federal Reserve, seem to play a double game. On one hand, they're promoting homeownership as the pinnacle of financial security and the American dream. On the other hand, creating an environment where only the wealthiest can navigate the turbulent waters of the housing market unscathed. In my opinion, the American dream is about having an asset that is appreciating and allowing you to gain wealth over time. You live in America. Invest in the assets that we have available to us. And just by the sheer day-to-day ongoings of the American economy, you will be able to create wealth for yourself and your family by owning that particular asset. That doesn't always have to be real estate. It can be ownership in a company that you work for, individual stocks, bonds, commodities, etc. But here is why the primary focus is on real estate and home ownership. You can leverage a mortgage and buy a couple $100,000 asset, aka a home, which you can then benefit from the appreciation of that home and that piece of real estate. And you only forked out 3 or 5% on the down payment. This is different from buying stocks. You're typically not going to leverage the purchase of equities or bonds, especially when you're just starting out. You're putting that 3 to 5% that you would have put down as a down payment into the stock market or into the bond market or any other commodities. You're only seeing appreciation on tens of thousands of dollars versus hundreds of thousands of dollars. Yes, a very oversimplified example, but the point is that you can use leverage to get a significant nominal return on real estate or housing. This saga of market manipulation doesn't just rob potential buyers of opportunities, it exacerbates inequalities. Those with lesser means find the dream of homeownership slipping through their fingers, as they're unable to capitalize on the timing of their sales, worsening the wealth gap in a country already grappling with the severe income disparities. February 2024, we saw a glimmer of hope, with new listings slightly rising year over year, suggesting maybe, just maybe, the lock-in effect was beginning to wane. But don't be fooled. The FHFA researchers quickly doused that spark of optimism. They project that the lock-in effect will persist well into, listen to this, 2033, with sales expected to plummet up to 54% with just a 1% increase in mortgage rates. Not to be the bearer of bad news, but the arch enemy of mortgage rates is inflation. Last I checked, CPI, PCE, and PPI were all showing increases in the pace of inflation. That does not bode well for mortgage interest rates. However, we have Powell, on the other hand, was just up there talking about changing QT, which of course means they're going to be slowing QT. But will that spark inflation, the arch enemy of mortgage interest rates? Time will tell. It's going to be an interesting dynamic to watch over the next several months, especially during election year. So, is there a way out of this labyrinth crafted by the hands of the Federal Reserve banks and the FHFA? Or are we doomed to watch from the sidelines as the very concept of homeownership transforms before our eyes? From a universal aspiration into an elusive club for the financially elite. In the shadows of these financial giants, a narrative unfolds, one of control, inequality, and missed opportunities. Yet, knowledge is power. By understanding the forces at play within the housing markets, individuals can arm themselves with the tools needed to navigate this complex landscape. But let's not end on a note of despair. Instead, consider this a call to arms. The lock-in effect, it is a formidable opponent, but it's not invincible. Remember, the dream of homeownership, of having a place to call your own, shouldn't be a casualty of high-stakes financial gamemanship. It's a fundamental part of the American ethos and one worth fighting for. As we stand at the crossroads again, the question becomes, will you accept the status quo, or will you challenge the powers that be for the sake of our homes, the sake of our families, and for our future? The choice is yours. I hope you join me in this revolution. My name is Darin Hunter. If you have any questions, don't hesitate to reach out. Have a great day. That's another guaranteed message.